Like, Dr. Gwennetta, can you share with the audience what exactly is due diligence and what does that mean, practicing due diligence to you?
So, welcome everyone. Thank you for having me. So due diligence, how I try to explain it now is something for the tax industry, tax pros that is a standard. It's just like if we know like beauty shop, hair people that do hair, barbershop people. A lot of times we hear them scream, "Oh, the state board is coming! The state board is coming!" And for and when they come, they're looking for to make sure the stylists are up to par in their industry, that they're doing all the things that they're supposed to do when it comes to regulations. Well, for me, due diligence is just that for the tax industry. Back in 2011, the IRS came up with, okay, we're now going to hold tax pros accountable for certain credits that we are giving our clients or allowing our clients to claim to make sure that they are really supposed to be claiming these credits. It's a part of fixing the tax gap. That's exactly what they decided to do. And so now it's a standard. If you prepare returns for clients who have the earned income tax credit, the child tax credit, the American Opportunity Credit, or the HOH filing status, then it's our job as tax pros to make sure not that they just get the credits, but that they actually qualify for the credits and that we show that we actually qualified them by interviewing them, by making sure that if we collect documents from them, that those documents is showing a narrative of
In the industry, that not just from your office, but just since you've been on this tour and you've been on this wave on educating us as tax professionals, with due diligence, what are some of, and the fact that your office was audited several times, what are some of the common mistakes that you see?
it's so many of them, to be honest with you. It's a couple of things. So I'm gonna just say a couple of them right quick. So one thing is that tax pros don't recognize that you have to show that your client met due diligence. So that means that you have to document it. Not that you just interviewed them and just said, boom, they qualify, but that you actually ask them the proper questions, that you document their answers, and then based off their answers, you ask additional inquiries. Based off their inconsistencies, things that was incomplete or things that look incorrect. And it's not based off just their interview questions. It's based off the income documents that they gave you. It's based off the driver license that they gave you. It's based off the answers that they gave you. It's an array of things, not just one thing. And unfortunately, a lot of tax pros don't understand that all of those things make a difference. Another thing is the Form 8867. So with the Form 8867, it's a requirement. It's one of the 4 requirements. But a lot of tax pros assume if they answer the questions on the 8867 that somewhere, somehow, they're meeting their due diligence. And that's all they have to do. One, it is a requirement, but it's more than just a requirement. It's not going to show that you're meeting the knowledge requirement. It's not going to show that you are the credits was calculated properly from all the other worksheets. It's not going to show that you had record retention. It's one part of due diligence. And I see a lot of people on line 5 of the 8867 a lot of time utilizing that area for their notes, not knowing that area is not for your notes. That area is for you to list the documents that you say you relied on. Meaning, okay, if someone gave you a birth certificate and you can show the relationship to that dependent, then okay, you can say you relied on that. But if somebody give you a report card with just the parent name on it, and you put the report card on the 8867 line 5, that's not something you would just rely on. What did that prove? What tested that show? What tested that say, okay, this helped me say this, they qualify. And so I think It's so many things. It's so
Right.
many things because the education around is not out there. And then it's like they don't understand the
Turns that maybe they have come through this office, and a lot of times is nothing there. It's nothing on line number 5. So technically you should not even transmit a return if there's nothing on line number 5. Whatever document, whatever source you actually get from that taxpayer, that is what you should be listing. So if you don't get anything, if you don't have um, school record, if you don't have lease, if you don't have medical card, whatever document you got, that is what you should list on line 5. And that is actually what you should have in your files. Because if you were audited and if you had zero, if you had nothing on that line, when the IRS auditor comes in, he's going to ask you to see the documents. You put that you didn't have anything, so he's probably already assuming that there's nothing, or maybe you did get something, but you did not document it. Guess what? You still could be in violation, but make sure you guys, before you transmit, you have the appropriate document. To Diamond, let's talk about the fees for a second. Can you chime in on those, Dr. Gwyneth?
So I think what tax pros need to know about fees is that one, the IRS has like 97% fine rate, meaning that most tax pros, if they go through an examination, they're going to walk away with fines. The average fines that most tax pros are walking away when it comes to due diligence is 30,000 plus, which is crazy, right? And not only that, a lot of tax pros think that the fines are because we say like $600. It was $635 for the 2024 tax season. They're thinking that, oh, if I don't meet due diligence, I'm gonna get paid. I'm gonna get fined $635 for a client, not knowing that it's $635 per credit, which you have 3 credits in the HOH filing status. So I think it's 25, 20, 25, 40, something like that, as far as what you can get up fined to per client, depending on how many of those credits in the HOH filing status they have on one return. Going into the 2025 tax season, of course, the IRS increased it every year, and it's $650 per credit up to $2,600, which if you get fined for all 5, say all 25 of those people have all 3 credits in the HOH file, then that's you walking away with a $65,000 fine. And it's really people walking away with those dollar amounts. And then the other thing is we think that it only retains to like 25 clients. 25 clients is the minimum. So when you hear other people talking about they got $79,000 fines, $80,000 fines, is because the IRS knows people assume that all they have to do is write a story and they're in compliance. And what that's doing is they're writing stories, but the story is not showing the clients qualify for the credits in the HOH filing status. You have to interview your clients. And when you interviewing your clients, you have to show the questions you ask and the answers they answer. Plus, when the IRS talks additional inquiries based off those answers, you have to ask more questions. In that case, you might summarize notes, but you have to have questions and answers interview process. That's a part of what the IRS asks you. Now, when it comes to software and where you put it, first of all, it doesn't matter if you put it in your software or not. The IRS they're not necessarily looking at it in your software. They're only going to look at it in your software in the event that you actually go through an examination. And so the best thing is in most softwares, you don't even have enough room to write all the questions and answers that your client need for each one of the credits to qualify them. So which way you ever do it. Dr. Cozette says she uses CRM. For me, I still use paper files. Why? Because anytime the IRS come in my office, I give them a clear picture of everything they need in reference to say that I'm compliant. I'd rather do that instead of always having to let them go through my whole system. So when they come in, if they want to look at the return, they can look at the return. But as far as what I've done to meet my due diligence, I give them everything that shows I met my due diligence just by using my client file. Now, there's no right or wrong. You can do it physically or you can do it digitally. But at the end of the day, same thing Dr. Cozette said, you need to have it all together regardless if it's physical and digital, which leads to something I recently just found out, that a lot of y'all are saying, oh, I use my software and my software has an area for due diligence, so I know I'm compliant. Let's think about the fact that tax software companies are just that. They are tax software companies. They're not tax preparers. So a lot of time when they're building these systems, they don't know what you need to be compliant. So what I've seen, especially in TaxSlayer, you have an area that says due diligence notes. And what happens is you write the notes in that area, which will lead you to run out of characters. And it ends up going to line 5 of the 8867. Well, I've seen a lot of people get fined because they wasn't aware, okay, this information is going to 8867. And when the IRS comes into your office, the first thing they're going to look at after the interview is Form 8867. And you started putting notes on your 8867 and you don't have those documents in your file. So in my opinion, it's always best that you have something outside of your software to be putting your notes. You put your notes in your software is not